We have absolutely seen cap rates compress over the last, let's say, 4 months or so. And so that kind of implies that the peak was somewhere around the end of 2023. So yeah, that's definitely happened, and it happened rather quickly. And I think with the recent, which is crazy to say because cap rates should be roughly correlated to interest rates, but not always, right? There's more than just interest rates that impact cap rates. There's a lot more that goes into it. And I think one of the things that's happening is investors are just tired of being on the sidelines, and they want to put money out. And if you're a fund manager investing in equity fund and your mandate is to invest at a 15% IRR, well, if you've been sitting on your hands waiting and waiting and waiting to jump back in, and you're waiting for the right deal, but it hasn't come, right? You've got that pent up equity demand. And even though your fund mandate is to invest at a 15% IRR, you might have to put that money out at a 12 because you just need to get it out. So you're willing to compress your returns, and that actually compresses cap rates in the face of rising interest rates. And I think we're seeing that to an extent because even as rates have risen, we've seen cap rates are lower, up to 50 basis points less than where they were a handful of months ago. And that makes getting deals done very difficult. Like I said earlier, we have to pick our spots. We have to find the right opportunities. We have to create some magic. And right now, just with where rates are today, things are, generally speaking, very negatively levered. So yeah, I think that we probably did see the peak in cap rates earlier this year or somewhere at the end of last year, right? December was just a very slow time, and that's when you can see the peak cap rates. So yeah, I mean, that could be a bottom, but I think, and we've talked about this on the show before, right? There's more than one bottom, and also this kind of speaks to the irrelevancy of a quote-unquote bottom, because the reality is you could have higher cap rates or lower cap rates, but you also need to offset that by where interest rates are, right? Cap rates could stay the same, but if interest rates drop like a rock, all of a sudden that's the time to buy, right? That's an awesome thing. In 2020, when COVID hit, rates dropped like a rock, and that was the time to buy. That was home run time to buy. Cap rates didn't move, but just rate movement alone made it a time to buy. And then it took 6 months or so for cap rates to catch up. Then they fell, they compressed really hard, and then the buying opportunity was gone. So really what we're looking for is good basis buys, properties that we're comfortable holding long term, that we have strong growth prospects for, and where there's a good spread between cap rate and interest rate. And it's also more complicated than that because you might be negatively levered going in, but through your business plan, you can achieve positive leverage.